1970s, China's securities and futures markets have grown rapidly in size in tandem with market reforms and liberalization of national economy. China's first joint stock company went public in August 1984, and in December 1990, Shanghai Stock Exchange and the Shenzhen Stock Exchange were both established. In October 1992, responsibility for securities regulation was spun off from the People's Bank of China to the State Council Securities Commission and the China Securities Regulatory Commissions. These two securities regulators were merged, and the surviving CSRC was vested with the exclusive authority to regulate the securities market in April 1998. The legal and regulatory framework for the securities market in China is largely based on the securities law of the People's Republic of China, namely securities laws. The regulatory objective of CSRC is to protect investors, to ensure that markets are fair, efficient, and transparent, and to reduce systematic risks. To achieve these objectives, the CSRC has the following authoritative power. First, it is responsible to study and formulate policies, strategies, regulations, rules, and measures. Secondly, it has to regulate securities and futures markets and supervise the senior executives and daily operations of securities companies. There are two stock exchanges, namely the Shanghai Stock Exchange and the Shenzhen Stock Exchange, and four futures exchanges, the Zhengzhou Commodity Exchange, the Dalian Commodity Exchange, the Shanghai Future Exchange, and China Financial Futures Exchange. Currently, all the above exchanges are membership-based mutual organizations, and the right to trade upon an exchange is confined to brokers who have been admitted to the exchange membership. The exchanges are assigned the role of front the regulator in their respective markets. Thirdly, the CSRC needs to regulate the offering, trading, custody, and settlement of equities, convertible bonds, the bonds issued by securities firms, and other related securities. Fourthly, the CSRC is also responsible to supervise the securities investment funds, authorize the listing of corporate bonds, and to supervise trading activities of listed bonds. Fifthly, the regulation on the listing, trading, and settlement of domestic futures is also up to CSRC. The CSRC needs to supervise the conduct of listed companies and their shareholders, supervise securities and futures exchanges, Securities Association of China and China Futures Association, and to regulate the registrations and settlement companies and clearing houses. License and supervision of market intermediaries are also up to CSRC. In all, the coverage of the securities law and therefore the authority of the CSRC is so broad as to include the regulation of shares, corporate bonds, treasury bonds, securities investment funds, and derivative products such as futures contracts, options, and warrants. Next is CIRC. As noted above, commercial insurance activity was resumed in China in 1980 when the People's Insurance Company of China was reopened for business. Against the backdrop of the fast-growing insurance markets, the CIRC was set up in November 1998 to assume regulatory responsibility for the insurance industry under the issuance of law of the People's Republic of China. Like CSRC and the CBRC, the CIRC is charged with both market conduct regulation and prudential regulation in relation to insurance companies. The objectives of insurance regulation is to promote the welfare of public by ensuring fair contracts at fair prices from financially strong companies and to correct insolvencies and unfair treatment of insured by insurers. In details, the areas regulated by CIRC include licensing and examination of insurance companies, insurer insolvencies, regulation of rate and reserves, investments, insurance policy forms, and competence of agents. The last regulator is CBRC. Since the reform and opening up, China's banking system has become larger and larger, including state-owned commercial banks, other commercial banks, policy banks, and non-banking financial institutions. To improve banking supervision, in 2003, the CBRC came into existence as the banking watchdog, taking over the role previously performed by the People's Bank of China. The legal and regulatory framework for banking regulation comprises the law of the People's Republic of China on commercial banks and the law of People's Republic of China on banking regulation and supervision. Like its peers in the securities and insurance markets, the CBRC is also a ministry rank unit under the direct leadership of the State Council. There are two important points to note about the CBRC. First, the CBRC regulates not only banks, but also a variety of specified non-bank financial institutions. The former group covers those banks discussed above, such as commercial banks, policy banks, urban-rural credit unions, and other financial institutions engaged in taking deposits from the general public. The latter group include financial assets management companies, trust investment companies, financing companies, financial lease companies, and other financial institutions established with the approval of the CBRC. Secondly, the CBRC is responsible for both market conduct regulation and prudential regulation in relation to the financial institutions. It regulates in practice, the CBRC exercises its supervisory functions through prudential standards such as asset liability ratio requirement, capital adequacy ratio, and risk management, as opposed to more interventionist means like the imposing of loan quotas as used under the planned economy. Specifically, the CBRC is empowered with the following responsibilities: to formulate supervisory rules and regulations governing the banking institutions, to authorize the establishment, changes, termination, and the business scope of the banking institutions, to conduct on-site examination and off-site surveillance of the banking institutions, and take enforcement actions against rule-breaking behaviors, to conduct fit and proper tests on the senior managerial personnel of the banking institutions, to compile and publish statistics and reports of the overall banking industry in accordance with relevant regulations, to provide proposals on the resolution of problem deposit-taking institutions in consultation with relevant regulatory authorities, to be responsible for the administration of the supervisory boards of the major state-owned banking institutions. Next, the figure presents a summation on China's financial regulatory structure. On the top of the framework is the State Council. Under the State Council, there are 4 parallel financial regulators, namely PBOC, China Banking Regulatory Commission, CBRC, China Security Regulatory Commission, CSRC, and the China Insurance Regulatory Commission, CIRC. In Chinese, 一行三会. Besides, the state-owned financial management corporations, namely the Central State Administration of Foreign Exchange Investment Corporation and 4 asset management corporations, are also under the leadership of the State Council. China Foreign Exchange Investment Corporations was established in 2007 to carry out foreign currency investment. It is an investment institution established as a wholly state-owned company, and its objective is to increase the investment earnings of foreign reserves, to secure commodities abroad, and to support rapid economic growth. The company's overseas investment portfolio is mainly composed of equity, fixed income, and alternative assets in both developed and emerging markets. The alternative investments include hedge funds, private equity, commodities, and real estate, etc. 4 asset management corporations were set up at the end of 1990s to take over the non-performing loans of the Big 4 commercial banks. Senda Asset Management Corporation corresponds to China Construction Bank. Oriental Asset Management Corporation deals with Industrial and Commercial Bank of China. Huarong Asset Management Corporation is responsible for Bank of China. Great Wall Asset Management Corporation is responsible for Agriculture Bank of China.